GKFX Prime presents the Market Analysis Webinar.
Hello everybody, welcome to another edition of the weekly webinar. Well, it looks like a bit of a turnaround happening at the end of last week and carrying on into the new week, where the dollar is falling back a little bit. We're getting some of these other major currencies trying to put in a bottom. Same sort of thing happening in gold. It was interesting that after the non-farm payrolls, the headline figure for non-farm payrolls came in ahead of expectations. So that was 850,000 jobs created in the last month, but the unemployment rate ticked higher and the wage growth was not as strong as expected, and that was excuse enough for some profit taking in those that had been buying the dollar. And so now we're seeing some dollar weakness at the start of the new week. So let's look at these charts, see if that continues. It's a shortened week because of the July 4th holiday in the States, but we do have Fed minutes this week, which has the potential to shake up Forex and other markets. Okay, so starting with the euro. So here you can see the bottom that we alluded to also in terms of its RSI bullish divergence here on the 4-hour chart. But if we pull out to the daily chart, I can't see it so well here, but it was the 118 handle. And then actually, if I just zoom out the 4-hour chart, I think we can see things a little bit better. You can see it was this little demand area back here when the price first, it had this big long decline, and then it's trying to push forward. You can see we'd been in a long down, and this was the first real bit of strong momentum we had, and then it was that second surge out of this block that has now acted as support as we currently stand, that took us above the 20-day moving average, and when we had that big uptrend in the euro. And obviously we rolled over again back under the 20-day, and now you can see here that we're a fair distance under the 20-day moving average. And so even if this isn't a bottom, it does look like a bit of a kind of base, bit of a sideways trend might be emerging here, because a few things I'm looking at. Okay, so this is we're below the 20-day moving average, which we've plotted on the 4-hour chart, as you probably know, as a 120 moving average. It's about the same as a 20-day moving average. We have that. We have the fact that we've not been overbought for quite a while in the RSI, and it's been contained under this, what I believe is the 60 level. So these are bearish things. The trend is down, but some reasons to turn a little bit more cautiously bullish here is this bullish RSI divergence. And what I wanted to show you on the daily chart was that if we zoom in, I can never quite get it right in terms of whether to have the chart shifting back or not. Okay, so here you see the big hammer pattern, hammer candle rather, on the daily chart. So that's bullish. Coincides with this RSI bullish divergence, and you can see that just kind of more simply that we rallied off that old demand area, and we basically made a false breakdown of the low. So the price attempted to break lower and just immediately popped straight back above that previous low again. So that's it's not a reversal of a trend in itself, but it's a sign that the sellers are losing momentum. And I wouldn't be surprised to see us, I don't know about overbought, but I wouldn't be surprised to see us push above this 60 level and potentially even go overbought on a 4-hourly basis this week. And that might carry us back up towards the 119.50, potentially even up to 120 again. Kind of taking us back into more of a kind of sideways range kind of situation than the real clear downtrend that we have been in. A lot of this obviously hinges on how the minutes play out, but it looks like people are easing up on their bullish dollar positions going into these Fed minutes. Let's switch gears to the British pound, and similar sort of situation here, where you can see that we've also had the breakdown of the previous, big move lower. Okay, pop, rolled over in a kind of pretty steady-ish downtrend with not a lot of momentum here, taking out the low and then just pop straight back above the low again. So you can imagine probably a scenario here where the big players came in, started buying around 138, pushed the price up. The price went too high for their liking, almost up to 140. So the big players, they stopped their buying. The price drifted low without all that big buying, but it didn't really power lower because there was no big sellers either. And then it came down to where likely a lot of people would have been trying to go short the market on a breakdown. People try and go short, and the big players use those short orders to go long and push the market back up again. And if that's the case, it does probably look like we're heading for a retest of these highs up here, and at least this supply area, which has not been properly tested yet. And that would also be the 20-day moving average. And you can see on the British pound chart, we're almost at this resistance that we've been in for a while. It was since the price broke under the 20-day moving average. We're almost breaking through that RSI, and you can see we're not too far away. Just another couple of powerful candlesticks away from probably going overbought and changing the dynamic and changing the momentum to be more positive, and that's more an environment where you want to be buying. So I've just I've highlighted, if we do get another swoon in the price, then let me zoom in a tad. This first candle is where we really got going, where the momentum turned. We did have a little bit of a slowdown in the first few hours of the week, so potentially that could work if the price just pulls back down and raises this candle even just down here. But I would look at 138 as being the kind of central important figure here, which is about there. A dip down to 138 and down as far as this demand area could be opportunities if this indeed is a bottom, as I suspect it might be, for the reasons just mentioned. All right, let's move on to a dollar yen. And as you might expect, a bit of a reverse situation happening here, where the trend has been positive in dollar yen, but we hit the highest in, I believe it was 3 years. Let's have a look at the weekly chart here. So we took out this high last week. We didn't, you need to stay below the high to make a double top, but actually even sometimes better than a double top is where you don't just fail at the high, but you push up and reverse right back through. And you can see, where did we, we broke up to 3-year high. Am I saying 3 years highs, or was it just a 1 year high? Where we, 2020, okay, sorry, 18-month high. 18-month high in dollar yen. It would have been 3 years if we'd taken out those highs, obviously. And then we just closed back right below that high there. And that high is where we closed. So it's not game over, but this is quite a bearish sign that it couldn't hold the level and it's closed back under it. It did close the week positively. And then on the daily chart, you can see we've got a modest, not particularly powerful engulfing candlestick, more like kind of railroads. And we're kind of teasing back underneath that level now. I'm not super confident to say that this downtrend is I'm not super confident to say this uptrend is over, but what I will say is that if we take out, I'll first be looking at this demand area here, which you can see is probably on a 4-hourly basis. It would probably start down here, something like that. So that's if you're looking to minimize your risk, you could start it down there. But I would say it's quite clear on a daily chart that we took out this previous day's high and exploded to the upside. So I wouldn't be surprised to see some demand kicking in, not much below where we come in, maybe down to these closing levels. And that's around 110.70. Now, if we start pushing down through 170, it's not over yet. And as I say, we could come down to, this is where we really first started exploding off the blocks intraday, which was around 10.50. But I think if we do take out these lows, which is around 10.40, 10.38ish, I think that will be a bad sign. Then we've got the 20-day moving average and the trend line as support still, so we could get a wash through there and then a bounce. Bearing in mind this trend is still up, But if we take out this trend line, then I do think that pretty much we've got a double top. That's just a false breakout, and then that we're seeing, we're back into the territory of a major downtrend in the dollar that would really need to test these lows down here. So that could be interesting. That could be very interesting if we're able to take out 110.40 to the downside and take out this rising trend line. And you have to say, in terms of pace of trends, I've said this from the start, the trend has been higher, but it's sort of always looked like it was going to roll over. It's just not been look at the power of that trend where you just, you've only had one down candlestick in the space of 10 versus this one, you kind of do one or two candlesticks and you get a down day, one or two down day, and it's been very choppy, not much, almost the same as I was describing before, where the big players came in, sold the market down, the price got sold the dollar down, price got too low, so then they've just been holding off, and then the price has come back to their level again, and then they found a bunch of buyers on the breakout, which they sold against, and now they're ready to push the dollar lower. And why would that be the case? It would be the case because the Fed have basically said that, okay, yes, they are planning on tapering, but it's still a long way off, and it depends on the data. And if the inflation does start to come down again, if it is transitory data, then they're probably just going to hold off and not raise interest rates anytime soon. Even if they do taper, they're still buying a lot of bonds. There's a lot of liquidity, and that's not such good news for the dollar. So that potentially is a scenario we're looking at here. The reverse would be if they say, if they give a more clear timeline, the tapering, and yep, the bond purchases are going to stop, and this party is over, guys. We're going to looking towards raising interest rates. It's very unlikely, I think, that's something like that would happen, but that would be the bullish dollar case where we'd see a continued breakout here against dollar yen. So let's see what they say in these minutes. Okay, moving on to the precious metals markets. And again, guys, I should say that if there are some other markets that you would like us to cover here, I tend to focus on the major currencies, the major commodities and indices. But if there is something else you'd want me to cover, please do let me know. Just drop a comment in the video and be happy to get to that. Okay, this is the silver market. So interesting here that so strong uptrend in, this is the daily chart, strong uptrend in silver, and then went sideways for a while and really got rocked by that Fed meeting, but then went pretty much sideways since, and never quite on a daily basis went oversold, which is pretty interesting. So it's equally to this big decline in silver here. The demand has always kind of somehow come in on the big declines, and so what we're seeing at the moment is this previous resistance, which then acted as support, has acted as support again, and that really was, if you say this was the downtrend, right? And then when we first we should have rolled over, continued with the downtrend, but we kind of pushed up higher, took out this high, and then saw that big explosive move to the top side, steadied, and then saw that big explosive move. So a couple of explosive moves out of this area, and so maybe no surprise that actually for a third time we're seeing another pretty explosive move as of Friday, enough that took us, I've drawn it as a sort of triangle here, but you can see on a daily basis, you could just draw it through the kind of 26 level on kind of closing prices, and we're pushing to the top side. Down to this 4-hourly chart there, you can see the kind of consolidation that we've had, but equally, it could have just been something like this. We had the first, even draw it through the highs. One false breakout, came down to that trend line, came down to the 26 level, and we've pushed up powerfully to the top side. This all looks pretty bullish to me, guys. I think this downtrend is reversing in silver. We've made new highs here. I think we're putting in a base here. We could see deeper corrections. If we do, I think this same level again can act as support. It's 26.29, but if we move it down to closing prices, I can never just drag it down straight for some reason. I always have to tip it down in angles like this. It could be down to here, which is more like 16. So 26 is obviously the big one. We've already come off 26. I don't think we get back to 26 again, but 26.20 to 26.30, let's call it something like that, is your new potential demand, where if it's been resistance, we've pushed higher, if we pull back to it, I think it could get interesting, but we might not even get there, because you can see here that we are now pushing through the RSI level that had been holding, the 66 level. Looks like we're going to get overbought. From overbought levels, that's when you can get your pullback, and that's your, that's your best trading opportunity typically. When you the bottom's put in, you get the first move to overbought, and then it comes off overbought, and that's your first dip to buy into the fresh uptrend. Now, that's just theoretically what I'm saying is the best kind of scenario. That might not happen here, obviously, but it sort of looks like it might. Right, now, so having a look at the gold market, almost a bit more clean cut than we talked about with silver just then, but you can see very much the same scenario in terms of the RSI resistance that had been in place around the 60 level, now pushing to the top side, and also at the very same time, price lagging a little bit behind the momentum, also testing these two prior lows. And so it looks like, again, we've kind of tried to break to the downside in gold, and it's been a false breakout. We've rallied straight up to the top of the range. There was some initial resistance there. I think that if we look at this in a bit more detail, you can see we did sell off from there originally. So naturally, it's a pretty solid resistance. Price came down right into where it initially started to push to the top side. Let's just quickly review our daily chart, and you can see again similar situation where it was those two. It was where we basically formed that double bottom, A, B, broke the neckline, and it's actually that neckline of the double bottom that we came and tested once, rallied up, price came down, took out the lows and rallied up. So you can see these currency markets and gold and silver all painting a similar picture here, where they all came down heavily, made a bit of a first rally, came down, took out the lows from the bottom of that first rally, and now are attempting a second rally. So the second rally could fail as well, but this is basically a base attempting to be formed, and it could be a bottom. So again, looking pretty bullish in gold. I mean, I think it's fairly straightforward what we're going to go for here, guys. If we get the breakout, hopefully it doesn't go too far. But if it does, you just basically try and assess that next pullback opportunity if we get the breakout. All right, so jumping around a bit here, but let's get over to oil. Obviously, the fundamental focus is still that OPEC meeting. They haven't quite resolved the situation yet, which is positive for oil, really, because they had been talking about adding some extra supply of oil onto the market, which would be negative for the price. But for the moment, they've just agreed to keep the production levels the same, which is actually positive for the oil price. So what does that mean in terms of the price? Well, we're back testing the 75 level again. After a little bit of a hesitation there, it looks like we've been holding the resistance, and we may be ready for another push to the upside. Just bearing in mind that it is a major kind of resistance level here. If we zoom out our weekly chart, you can see how long it's been since we probed these 75 levels. It goes back more than 5 years. So we'd be pushing into sort of 6-year highs if we get up through 76 and change here. So it's a big level. It's significant. The market's pretty heavily overbought. I still think there's a chance we roll over here, but just in terms of the short-term price action, it still looks quite constructive. and I don't think we've got quite enough evidence to really call like a long-term reversal. But it's that same picture we'd been talking about before, where the momentum has been weakening off. But like I say, this is a short-term push into overbought territory, which is not something you see in a weak market. So oil still trending higher for now. That's the big level to take out on the top side. Maybe we get to 77, and that's also an opportunity to think about whether the market reverses. Right, moving on to the S&P 500. Well, we've obviously just exploded to the upside. It was a kind of steady meandering move, and now it's just really taken off, and we're up to 4,350. A little bit of hesitation in place, but I think that was really just before the long weekend in America, and nothing really to read into this little small shooting star pattern here. I don't think that means too much. If we are looking for trading opportunities, we're unlikely to get back down to there. But if we look to where we last pushed up, these are the two big last candles. I think if we come back down to this demand area, that would be a natural entry point for bulls. If we're coming a bit lower, this area has already been tested. Broke out, came back, tested it, but maybe we come back lower. Every time the strength comes back into the market around here, so could be as deep as that. But yes, it's really a strong uptrend. It's been dragging on for so long now that if you do imagine there is a kind of hawkish surprise at this Fed meeting, where the dollar suddenly shows strength again, and all these bottoming processes that we've seen in these other markets could just completely reverse, then dollar strength should mean a weak stock market. But it doesn't look like anyone believes that right now. Everyone believes a stronger stock market, and they're loosening up on their short dollar positions. They're looking to turn long the other currencies alongside the stock market. That seems to be what's going on. Bitcoin, very uncertain, pretty much range bound. All these kind of peripheral statistics that you can look at for Bitcoin just show a lot of players have exited the market. It was obviously a big shakeout, down 55% or whatever it was from the high in Bitcoin, worse in the other altcoins. So, not as much enthusiasm for cryptocurrencies, understandably. I'm sure that enthusiasm would come straight back again if we were able to break out of this rut that we're in. If we are able to just kind of zoom up through 40,000, kind of get out of this trading range, get some strong price action again, I'm sure the enthusiasm would come back. So it's probably the enthusiasm with the ways of measuring that in terms of number of active accounts and things like that. It's probably not very predictive. It's something that would happen after the price breaks out. But for now, we're just languishing pretty much at 35, which is the midpoint of 30 and 40. So we're still in this trading range. And we can't really be too sure, I would say, the direction until we take out one of those big levels, 30 or 40. So range bound for now in Bitcoin, and I can't really tell much from this momentum. Still mostly weak, and we had almost got overbought here, but we didn't quite get there. Still generally, the momentum shows a negative bias. Which would suggest, if anything, we're going to drop down through below the 30,000 mark. Right, thank you everyone. I'm going to call it a day there. Thanks very much for watching, and make sure to subscribe to the channel so you don't miss next week's video.